Today is Monday, December 1st. Do you hear the screeching sound? It's like there's a car wreck outside. The market drops about 9%, talking about the S&P 500. Let me just explain something here. I think this is really interesting. The market drops because they say it's official, we're now in a recession. That was the headlines today on Yahoo News. The other headline was sales were up modestly to the start of the Christmas holiday shopping season. Actually, sales were up 3%. Not bad. I mean, had they come in at negative 5%, would that have made everyone happy because then it would have been just as they thought? No. Now they're saying, well, since sales were so good during Black Friday, it must mean that there's nothing meaningful coming, for the rest of the holiday season. I think that's a bunch of baloney. I do think, margins are probably squeezed a bit. People are fighting for those consumers. There are different stores that are getting hurt. Target's saying they're going to be down 6 to 9%. You know what? Walmart's up. There's a lot of stores that are up. There's 3% total shopping as far as dollars, revenues, higher than the prior year. This is a recession. I mean, how bad is that? I mean, don't get me wrong, it's bad, but that's not that bad. Let me give you another example of how irrational this market is. And this is the way I look at it. The 10-year Treasury is trading at about 2.7%. So you can get a Treasury note for the next 10 years from the U.S. government. The full faith and backing of the U.S. government, and you can earn a whole 2.7% over the next 10 years if you hold it till maturity. Possibly, if interest rates go higher because they're printing money right now, you may earn less than that 2.7%. Or you have your choice to buy Johnson & Johnson stock. And just a full disclosure, I do own Johnson & Johnson in the fund that I manage, as well as the stock that they bought out today that we made about 90% on, Mentor. But with that being said, let me just go back to this example. Johnson & Johnson's yielding a little over 3%. The U.S. government is yielding 2.7% for the next 10 years. Johnson & Johnson is trading at a 12 price earnings multiple, or what's called a PE. All right? That PE, so for the next 12 years, if they earned everything that they were expected to earn today, and they kept earning it for the next 12 years, essentially they could buy us all out and be private. Johnson & Johnson's. They actually make money every year. They have budgets. They adhere to them. They make money. They pay off debt. And the government does not. If you were to ask me today, what would I rather invest in for the next 10 years, Johnson & Johnson or the U.S. Treasury 10-year notes, that's a no-brainer. It's J&J. People need aspirin. They need different drugs for when they go into surgery. They need the products that J&J has, whether there's a recession or not. But yet Johnson & Johnson is getting sold off, and off 25, 28% off its highs. Why is that? I mean, that's what I have for you today. I think it's really interesting. I think this market is irrational. I think there are stocks that deserve to be beat up. Don't get me wrong there. Some of the financials, they were hammered today, and probably rightfully so. But there are stocks that are undervalued. There are great opportunities. Again, we're going to see this market trade within this range. Anywhere on the Dow in the 7,500 to 8,500, 9,500. I think there might be a play there. I'm not a trader, but at the same time, I think we're going to be range bound through maybe the first half of 2009. I'd like to see a little sprint here with the Christmas season rally, but I don't know. Getting off on a bad foot here December 1st, I still think there's a lot of exceptional buys out there. Today's December 1st. I'll be back to you again next week.